Well, hello everyone and welcome to Momentum channel. My name is Mo, and in this video, I'll be talking to you about the stock market investment portfolio that my wife and I have created together. It's a portfolio mainly consisting of 9 exchange traded index funds that we have selected. At this part of this video, I'll be talking to you exactly why we have selected these specific 9 ETFs, what is the asset allocation in this account, and how much dividend income we earn every single year as a result of this portfolio. Without any further ado, let's get into it. Our investment portfolio between my wife and I mainly consists of that 9 ETFs, and these include a few ETFs that gives us exposure to Canadian stock market. We have a few of those that gives us exposure to the US stock market, as well as some exposure to emerging markets and international markets. We have also 2 ETFs among this mix that are considered more or less and all-in-one ETFs. These are ETFs that gives you exposure to the entire stock market, geographically diversified by mere fact of holding them alone. You might be asking then, why didn't we only opt in to select those ETFs as opposed to having all these 9 ETFs that I talked to you about? And the main reason is that while all-in-one ETFs are excellent choices for investors who don't want to have to worry about, picking and choosing different ETFs to get proper exposure to different geographies and different markets, there is also that level of fun as well with having a little bit more control over the investments that you have. So while we have selected a more passive investment approach by investing only in index funds, I personally didn't mind having a little bit more control over it. So that's why I'm experimenting with these 9 different ETFs. And so far, I must say they've done quite well for us. This portfolio in this format that we have, more of a passive investment approach, has been around for about, I would say that 6 to 8 months. Before then, we used to have a lot of stocks. I used to invest in stocks, pick stocks, and try to time the market. But all in all, over the span of the past 6 to 7 years that I've been investing in the stock market, I've learned my lessons and really now navigated towards having that passive investment approach to stock market through these index funds. As for our asset allocation, which essentially talks about how much exposure we get to different markets throughout the world, our target exposure here is aimed at 50% exposure to the US stock market, given that US economy is the largest economy in the world. That 50% exposure is the target for us. Currently, we have 45% exposure in this portfolio. Next, we want to have about 25% exposure to international markets. Currently, our exposure at this time is at 10%. So we have a little bit of that gap that we have to fill over time. Our next big exposure would be to Canadian markets. I'm an investor here in Canada, so I want to make sure that I have at least that 15% exposure to Canadian markets. Currently, my exposure is a lot higher because when we started investing passively, I put a lot of investments into a few funds that give high dividends in Canadian markets. Currently, we have exposure around 42%. Over time, my goal is to bring that 40% exposure to much lower, as I mentioned, around 15%. The way that I'm intending to do that is not by selling these ETFs, but rather as I put new money into the markets and as I earn new dividend incomes, I try to deploy them mainly towards the US, international, and emerging markets, as I mentioned to you about. And lastly, I talked about emerging markets. We have a target of 10%, and currently our exposure is only at 3%. So that's another area that we have a little bit of gap that we need to work towards to get to that balanced target asset allocation that we have set for this account and this portfolio between my wife and I. And now, why don't I walk you through the specific holdings, the 9 holdings that I mentioned to you. I'm going to show you the overall number of shares that I have between my wife and I, how much expected dividend income we have from them, and what's their dividend yield, what's their fee. You'd notice right off the bat that their management expense ratio, MER, is very, very low. And that's why we've been very selective of these funds in adding them to our portfolio. All right, so as you can notice here, the biggest exposure that we have here is to VDY, or a Vanguard FTSE Canadian High Dividend Yield Index ETF. We currently have 3,679 shares of it with a market value of $154,886. Accounts for 34% of our portfolio. With VDY, we collect a dividend income on a monthly basis. The next dividend payment for it is expected to be in early June. Given the amount of shares that we have with VDY, our annual expected dividend income from these holdings are around $6,500. Our shares of VDY overall is showing a positive return of 1.3%. And from a management expense ratio, MER, the VDY has an MER of 0.22%. Our next big holding is VFV, or Vanguard S&P 500 Index ETF. We currently have a total of 1,266 shares, or about $126,000 invested. It accounts for 27% of our portfolio. With VFV, we are getting exposure to the 500 largest US companies that are in Standard & Poor's S&P 500. It's not mainly geared towards dividend, but more so geared towards growth. And that's why the expected dividend income is not as high. It's only at $1,500 roughly in the year. When we look at the dividend yield for VFE, it hovers around that 1.2%, whereas for VDY, it's higher. It's definitely a lot higher. It's around that 4%. No surprise, because it's geared towards dividend, the VDY index ETF. Our next big holding is VEQT, or V Equity, which is the Vanguard All Equity ETF portfolio. It's an all-in-one basket ETF. We have our entire investments of V Equity as part of our Smith Maneuver account. This is mainly of interest for those investors who are in Canada and they want to tap into their equity of their home and borrow that equity to invest. And that's the account that we've established for about more than a year. You do notice here it accounts for 22% of our investments. It's up by 1.2%. Our next big holding here is XEF, which gives us exposure to international market. XEF is iShares Core MSCI East and Far East Index ETF. It's offered by BlackRock. It currently showing a positive return of 5.7%. We have 705 shares overall here, with an expected annual amount of dividend of $776. With XEF, we are looking at an approximate dividend yield of 3.2%. Next, we have shares of XUU, which gives us exposure to US stock market. This is an overall total stock market index fund. Unlike the VFE that only focuses on the 500 S&P 500 companies, here we are getting exposure to the entire US stock market. It's offered in Canadian dollars, and we have 457 shares of that. XUU stands for iShares Core S&P US Total Stock Market Index ETF. Our shares of XUU are currently up by just shy of 1%, and it does pay its dividend on a quarterly basis. It's worthwhile mentioning that XUU has a dividend yield of around 1.5%. Next, we have VTI, or Vanguard Total Stock Market Index Fund ETF. Similar to XUU, it gives you exposure to the US companies, in total stock market and US companies, but this one is offered in US dollars. And we're mainly maintaining our VTI shares in our RSP account, just to take advantage of the better treatment of the withholding tax. So there won't be withholding tax as a result of that. We currently have 36 shares of VTI, and they're all maintained in our RSP account. It's currently up, it's currently down by just a fraction of a point, 0.3%. VTI does pay its dividend quarterly. You do notice the month that it pays its dividend. It's in December, March, June, and September. It has a very, very low fee, management expense ratio of only 0.03%. Next, we have shares of XIC, another index ETF that gives us exposure to Canadian markets. With XIC, we get exposure to the entire Canadian market and not just a handful of dividend-paying ones. XIC is offered by BlackRock, and it's iShares Core S&P Toronto Stock Exchange Capped Composite Index ETF. It's currently up by just 1% and does pay its dividend quarterly as well. XIC has a dividend yield of around 3%. Next, we have VT, or Vanguard Total World Stock Index Fund ETF. It's again considered to be one of those all-in-one basket ETFs, gives us exposure to US, international, emerging markets. And with VT, we have 75 shares. It's currently down by about 0.5%. It does pay its dividend on a quarterly basis and has a very low fee of 0.07%. VT is also offered in US dollars. That's why we are holding these shares of VT in our RSP account, to take advantage of avoiding to pay and have that withholding tax. And lastly, we have shares of XEC, which gives us exposure to emerging markets. XEC is iShares Core MSCI Emerging Markets Index ETF. We have 265 shares of it with an expected dividend amount of $172. It currently is down by about 1.5%. With XEC, you are collecting your dividend income only on biannual basis, and it has a management expense ratio of 0.27%, which has the highest fee among all these 9 holdings that we had in our portfolio. Overall, if you look at our portfolio and tally them up, and based on the weighted average, the management expense ratio for this entire portfolio is only at 0.17%. So that's taking into account the sizes of each one of these holdings that we have and their respective MER. Our average for the portfolio is at 0.17%, the weighted average. This portfolio overall is up by about 3%, 2.8% to be exact, giving us a profit, unrealized profit of $12,526. If we add up all the expected annual dividend income, we are expected to collect annually around $11,238 in dividend income. And if you look at it more closely, that translates to about $937 dividend income per month, or $31 in dividend income per day if we divide them equally throughout the year. Now, in terms of the ETFs that we've been buying over the past several weeks, mainly I've been buying shares of XEC, XEF, and VFE. We've been also buying gradually a little bit shares in VDY, especially as we are collecting some dividend income from VDY, but it's very, very minor because we don't want to get much more exposure to the Canadian markets, as I pointed out, and we are trying to focus towards that target asset allocation that I alluded to earlier on. If you're curious and want to know what ETFs and shares I'm buying on a real-time basis, be sure to follow my account on Blossom Social, and you can follow me with the handle Momentum Finance, and just check out what shares I'm buying, what's the rationale behind it, and be sure to follow me there as well. I would love to hear from you and interact with you as well on that platform. Well, thank you so much, everyone, for watching this video until the end. I hope you found it beneficial, and hopefully it inspired you to also get started investing, and potentially gave you some ideas of what are some of the thought process behind choosing and picking these index fund ETFs for our portfolio. This is not a financial advice, and I do encourage you to, of course, do your own research and let me know what holdings you have in your portfolio and what are some of your rationale in picking those ones and adding them to your stock investment portfolio. I'd love to hear from you. If you did enjoy this video, please give this video a thumbs up and subscribe to our channel here on Momentum Finance. I post every week videos about investing, including investing in dividend stocks, growth stocks, passive investing, as I talked to you about. We also talked about ways to reach financial freedom. Thank you, and I hope to see you all next time.